Welcome to the Happy Lawyer Project. I'm your host, Akoma Moronu, and I created this show to help lawyers find happiness in life with a law degree. Together with my guest, we provide the knowledge, skills, insight, inspiration, and encouragement you need to find your happy. On today's show, I chat with Jonathan Twombly. He is the owner of Two Bridges Asset Management and the podcast host over at Capital Gains Podcast. Over the years, he's become a dear friend of mine because, as some of you may know, I started to do a little bit of real estate investing a couple years ago, and I started that journey on a well-known amongst real estate investors website called Bigger Pockets. And while on that podcast, I had kind of reached out to people asking for advice and feedback, to work through some of my numbers and my potential deals. And Jonathan was somebody who was so incredibly giving with his time. And we learned that we were both former Columbia law school students and that he had been a BigLaw associate. And he actually lived quite near me in Brooklyn. So we had a lot in common. He had 2 young daughters. I had 2 sons. And Jonathan has just been, over the years, just a wonderful resource, both inside and outside of real estate. So it's such a pleasure for me to get to share his story in BigLaw with you guys, and also some of his advice about real estate investing for lawyers in the current market and kind of looking forward at what to expect in the coming years. Enjoy! Welcome to the Happy Lawyer Project. It's such a pleasure for me to introduce you to Jonathan Twombly of Two Bridges Management. Welcome, Jonathan.
Hey, it's great to be here.
So I'd love if you could just start by sharing a brief description of who you are and what it is that you do.
So I run a real estate investment management company called Two Bridges Asset Management, which is based in Brooklyn, New York. But what we do is invest in apartment complexes in the southeastern United States. So at the moment, we're focused on South Carolina.
And before we dive into your real estate work, which I'm really excited to talk about because it's something that people come to me about often, I'd like to start with the fact that you used to be a lawyer. And I'd be interested if you could just tell us a little bit about your legal origin story. Why did you become a lawyer?
Yeah, it's funny. The reason I became a lawyer and then what I actually wound up doing as a lawyer are completely different things. But I became interested in being a lawyer when I was in college, and I sort of on a whim in my junior year started studying Japanese, and I really fell in love with it, and I decided that I wanted to do something that would allow me to have a connection with Japan. And I really didn't have any context for it. Like my family, everybody is a teacher. Like there's nobody involved in business. I had no idea of all the different things you could possibly do that related to Japan. But kind of the only international anything that I had even heard of was this thing called international lawyer. And I didn't even know what that meant, but I decided I wanted to be one because somehow that would enable me to do something related to Japan. And as it happened, I went to Japan after college. I lived there for 3 years. I wound up working at the biggest law firm in Japan at the time, doing like translation and helping them, sort of quality control their English correspondence and stuff. And came back and went to law school and decided that I actually really liked law school. And I kind of realized that if I liked law school, then I probably shouldn't be a transactional lawyer. I should probably be a litigator because that's kind of what they really teach you to do in law school. So I wound up going into litigation, and I never actually did any or almost no work related to Japan at all as it happened. So I went to work. I was doing litigation, sort of commercial litigation. First few years running in and out of court, working directly with partners. It was really, really great. But after like 3 years or so, I started really getting burned out. And, to make a long story short, it took me another 9 or 10 years to actually get out of law and a couple of false starts. I left a couple times and I always wound up sort of getting dragged back in. But I wound up practicing for about 12 years, all told, with probably 2 or 2.5 years off in the middle of there. So somewhere, interspersed in between stints of practicing law.
So that's really interesting. I didn't realize that you kind of had those in and outs of the law. Why did you find it so challenging to move out of the law?
because I really couldn't figure out what I wanted to do. And part of the thing for me was that I was working at a big firm in New York, and I was just working, these horrible hours, and working weekends, and I was single, and I didn't really have anything other than work. And of course, you get into those patterns. If you're working all the time, you also can't meet anybody. So you're sort of like I got into this vicious cycle where I was just like alone all the time, and my life just became like eat, sleep, work, eat, sleep, work, eat, sleep, work, and for nothing. Like I wasn't doing it for anyone or for anything, and I was just becoming really more and more depressed. And the more depressed I got, your option when you're depressed, this is if anybody's ever experienced real depression, one of the things that happens is your world becomes very, very narrow. Like you get real tunnel vision.
Yeah.
And so I started feeling like this is all I can do. Like I hate this job, but I can't do anything else. And that just makes the depression worse. So it feeds on itself. So I just felt like I have no options. I have no options. I have no options. And I was trying to do career consulting and trying to find, a path out. And I kept on hearing this advice like, well, you've got to figure out what you want to do, but you should never leave your job until you have a new job lined up, and all the sort of advice that just made me feel even worse, because all I wanted was just to get out. And and everyone's telling me, well, you can't get out until you find something else. And here I'm saying I don't have the bandwidth to find something else because I'm super depressed. So I just got into this really bad vicious cycle, and that was one of the reasons why I had trouble getting out sort of the first time.
You are certainly not alone in that. I get a lot of emails from people who are in that place of feeling really stuck and really myopically kind of focused on how stuck they are. And it's hard, to create that space when you're in that, to create the space to do that kind of self-discovery you're talking about when you're in that headspace of depression. How did you get out of it? How did real estate become the answer?
Well, there's sort of many, many years between that and getting into real estate. For what happened to me is, it's funny. I realized at some point, and this is now sort of third year lawyer, fourth year lawyer, and I came to the realization that whatever people said about what I ought to do, it wasn't possible for me to think about my next steps until I got out of the situation. So I just walked off the job. I was working at Gibson Dunn in New York. It was a great job. It was obviously making a lot of money. It was doing super high level work, but I just completely burned out. And I just was like, you know what? See ya, I'm out of here. And it was really funny because as soon as I left, I'd gone from thinking I had no other options to now everything was an option. So I'd be sitting at home, and you probably remember this from being in New York, but they used to have these commercials on during the day for this thing called Apex Technical School, where you could go learn how to be learn how to fix air conditioners and that kind of stuff. And I would watch that. I'm like, I could do that. It's all of a sudden, I could do anything. But that also wasn't realistic. And what wound up happening was after being off the job for about 6 weeks, my firm called me up and said, hey, look, this one case that you worked on has kind of come back to life. Would you consider coming back and working part-time just on that case? And I was like, I really like that partner. I like the client. So yeah, I'll come in and I'll work part-time. And when I was working part-time, it was much better. I didn't feel the pressure of being on the partnership track. I really set my own hours. I didn't have to juggle work. And I really liked working part-time because every hour I worked, I got paid more, so it was a different incentive system. And after doing that for a while, I started thinking, well, maybe it's not really law that's the problem. Maybe it's working in New York that's the problem. Maybe I need to get out of here and get into a less high pressure market. So I decided to move to Boston, which was kind of originally that was always my plan. I went to college in Boston, and I always wanted to go back, and I kind of got sidetracked in New York because I went to law school here. And so I found myself a job in Boston, but it wasn't really any better. And I wound up actually coming back to New York with that firm. And then after being back in New York for like about a year doing the same thing. I just can't take this anymore. And I just walked off the job again. And I realized at that point that like I needed to have like a plan this time around. Like even if I didn't have a job yet, I needed to have a plan. And what I decided at the time was that I would go back to school, and I went back. I wanted to do something related to Japan. So I decided to go get a PhD in Japanese history. So I went back to school. I was at Columbia again, getting a PhD in Japanese history. And at that point, I met my wife, and I decided that I didn't really want to be like a brand new professor at the age of like I would have been like 40 when I finished, and in some small town someplace with a Japanese wife, and have her be like the only Japanese person in the whole town. And I thought that was kind of unfair. So I decided I would go back to practicing law temporarily, quote unquote, temporarily, while I figured out what I was going to do. And while I was temporarily practicing law, then the great crash happened. And at that point, I was just lucky to have a job. So working temporarily while I figured out what to do wound up being like a 6-year proposition. So, I came out the other side in 2011, and I'm getting a little long-winded here with the story, but what happened was after the great crash, so I was a litigator, right? I had been through the dot-com crash, and after the dot-com crash, like litigation exploded because everybody was looking for somebody to blame, right? They were looking for someone to blame for the fact that their company blew up or whatever, and everybody was suing everybody. So after the great crash in 2008, we were all kind of like cinching up our belts, kind of like girding ourselves for the wave of litigation that we were expecting, and it didn't happen. Because the crash was so great that people didn't want to spend money even on litigation, So instead of having this like massive amount of work, the opposite happened. The work just dried up, and I was sitting around like with nothing to do at my job, and that was really no better than being overwhelmed. I actually hated it so much that I tried to quit more than once. And if you can believe this, even though my firm I wasn't doing any work, they talked me out of quitting because they were like, we really like you. We want you to stay. Would you please reconsider? The managing partner actually said to me, like, you've presented me with a real dilemma because you're not billing any hours, but we want you to stay. But that sentiment didn't last forever. And eventually they did get around to letting me go, but it took them like 2 years to do it. And during that time, I really started thinking about what it was. I had a lot of time then to think about what it was I really wanted to do. And before I actually got laid off, I started making some serious efforts to get into the real estate field, sort of doing a lot of networking. So I had kind of like laid some groundwork in that area before I actually got, a notice of termination. That was in the beginning of 2011. So that was, sort of how I finally got out of law. Was they booted me out, and I realized at that point that I just didn't have the stomach to interview for any more law jobs. Like I had really reached the end of the tether with law. I realized, sort of just from a practical point of view, I was never going to be able to convince anybody to hire me for a job that I didn't want them to hire me for. So, I realized that I really this time around had to go think of something else to do.
So why the interest in we met for a little bit of background on Bigger Pockets, which is a real estate kind of social network platform. And you so graciously helped me out when I was early in my real estate days. And I still am early in my real estate days. So I'm so grateful to all of your advice all the time. But I'd be interested in knowing kind of what was it about real estate that was so interesting to you?
So while I was still a lawyer, I had been thinking a lot about, I wanted to be a business owner of some kind. And I liked assets. Like I liked the idea of owning something that was going to make you money without you having to like work really hard for it. And I guess that just makes me sound really lazy, and that's not what I mean. It's more like I like the idea of the concept of there being sort of some kind of like residual value baked into what you're doing, as opposed to like the billable hour where you just like, if you stop billing hours, you stop making money. Like I like the idea of there being something, value being unrelated to the amount of time that you put in. So I had been thinking about being an equities analyst, but then the stock market crash happened, and I had always had this interest in real estate. Like my dad, like I said, my parents weren't in business, but my dad was an architectural historian, and I spent a lot of time as a kid just looking at buildings. Right, it was just sort of something that I just did. Like buildings were just in my consciousness all the time. And at some point, I realized, well, you can actually make money with buildings, but I really didn't know how to do it. But during that time when I was, kind of like sitting there struggling to occupy myself during the day while I was at work, I started just getting online and kind of looking at property and figuring out how to underwrite it and figuring out how it, like how you make money with it and coming up with an investment thesis and, like just sort of like noodling over this idea. So that's kind of how, so by the time I got actually, lost my job, I had been really kind of steeping myself in this for a couple of years.
And unlike most people, you went big. I think most people start out with maybe a single family or a duplex, or maybe they invest in a REIT, but you went straight for the multifamily.
Well, so I was very fortunate. What happened in my case was, so I'd been doing, as I said, some networking in the real estate space. And I kept on running into the same advice, which was, look, Jonathan, at your age, I was like I think I was almost 40 at the time, maybe even over 40. Like people were telling me, at your age, with your background, given, what's going on in the world right now, like nobody is going to hire you in real estate. Like no institution is going to hire you to be a real estate analyst. None of the big New York families are going to hire you to work for them. So the only way you're going to break into this business is if somebody just takes a liking to you and offers to partner up with you. And lo and behold, that actually happened to me, right? So somebody had just said to me, like, this is your only way to get in. And then I was networking with, just everybody I could meet who was in the business. And I'd been talking to this woman for a few weeks, and she had told me she was in the field, and she just one day said to me, "Hey, let's become partners." She and her family owned a bunch of fairly sizable apartments. They owned about 700 apartments, I think. But she wanted to do it as a business. Her husband didn't want to, so she was looking for a partner. And she said, "Look, why don't you become my partner?" So I was thought about it, and I tend to not do things like very impulsively. So I said, okay, I gotta sort of ask around about this. So I started asking friends whether they thought this was a good idea, and a couple of my friends said, "Well, let me meet her, and let me tell you what I think." So after introducing her to a couple of friends, they both said the same thing, which was, "Oh, well, we like her, and we think she sounds like she knows what she's doing. So if you go forward with this, we will invest money with you." And it wasn't just like a little bit of money. Like they both of these people had offered like $1 million or more. So suddenly I was like, I've just raised $2 million of money without even asking for it, and somebody has offered to be my partner. I guess I ought to do this thing, right? So that's how I got into it. Like that's why I was able to go big from the beginning. So I recognize like not everybody. I was really, really lucky that this happened. Now, we didn't immediately find success. As a matter of fact, we wound up, chasing deals, not being able to close them. We lost a lot of personal money. Both me and my old partner did. And after almost 2 years of just like utter failure, we decided just to go our separate ways and fold down that business. And what happened after that was that one of my investors and I got together for dinner, and I said to him, "Look, I'm not really sure what to do. I might have to go back to practicing law again." And he was like, "Don't get hasty. Don't don't freak out. Why don't you and I form a partnership ourselves, and you can keep on doing this. So that's how Two Bridges got started. And I still had the original investor money committed. Fortunately, sort of like the biggest thing I did right, I think, in the original partnership was I didn't put any investor funds at risk. So all of the losses were out of my own pocket. So my investors were happy. Like it didn't, they just did. For them, it was just a matter of like they didn't get to deploy this capital that they wanted to deploy, but they didn't lose any money. So they were happy with that. They were happy to go forward in the next iteration of things. And it still took me a good year after that before we finally were able to close our first deal. There's a lot. I mean, it's a difficult field to break into. I'll tell you.
I have a mindset question for you. How did you, I guess, not having closed a deal, having that first partnership not work out, what were you saying to yourself to stay in it? Like, how do you go for another year looking for deals when you've never been successful getting a deal?
Yeah, I mean, part of it was that part of the deal with my new partner was that I got some runway. So I was actually able to pay myself while I was building the company. So that was huge, right? So that enabled me to keep going, financially. Like I literally would not have been able to go forward financially if I hadn't had that arrangement. I had lost too much money the first time around basically lost all my own money to bootstrap things. So I needed that, sort of investment in me from my partner in order to just literally go forward with it. But I guess, I was just determined. Like I really wanted to make a success of it. I didn't want to go back to practicing law. That was a big motivation for me. Like I just had to go. I guess I'm the kind of person who I just keep on moving forward. Like whatever is going on in my life, I just keep on pushing through. And even though I guess I don't really ever think of myself as being a particularly determined person, I guess maybe I am, because I just always just keep, like there's nothing to do but keep moving forward. So I just do.
I love that. I think that that's right. And I think that kind of the flip side to that was that even before you knew what you wanted to do in law, you just kept kind of pushing through until you could find your way out of it. But then when you found something that you were really passionate about, that kind of became a strength and allowed you to really turn things around. Because I know a lot of people, after that first partnership fell apart, would have definitely either spiraled back into depression, tried to pivot again, gone back to law. So it's a real testament to you and kind of your self-confidence that you were able to stick with it.
Well, I appreciate that. It's funny. I recently came across a quote from Winston Churchill, which describes this phenomenon. But he said something like, "If you're going through hell, keep going."
Yes.
And it just. I mean, I think it's such a great quote because it's just so true. Like you don't get out of your crummy situation by just standing pat, which is kind of what I did when I was a lawyer. I mean, I did as a lawyer, like really kind of, other than the times that I just quit because I reached my breaking point. At that point, I just did kind of stand pat, and I just extended this period of misery by, many, many years instead of just getting out. And the funny thing was, I felt so resourceless when I was a lawyer. After I got out, and I look back now and I think like, God, when I was a third year lawyer, when I was 30 or whatever, I mean, there was like, still really early in my career, totally employable. I had this amazing resume. I mean, I went to Harvard, I went to Columbia, I worked at Gibson Dunn. Like I could have literally done anything.
Yep.
At the time, right? But my mindset was such like I literally thought I had no options. It was like I could practice law or I could be homeless. Like those were my two options that I thought of at the time, and it just wasn't true. I mean, I could kick myself now for like what other things I could have done with my life at that age had I only realized like how employable I actually was. So
that's actually the number one story, as I like to call it, that I hear lawyers tell themselves is that Ivy League graduates, big law associates who come to me and say, I don't know what to do. I can't do this anymore, but if I don't do it, I'm going to be homeless. It's such a common phenomenon.
I think, lawyers in general, and it's ironic I should say this given what I do now, because it's a job that by its very nature involves a lot of risk. But like lawyers, we're very risk averse, most of us, as a general proposition. And I think that risk averseness really kind of can really feed on itself and turn on itself and get twisted in really horrible ways. And it does, I think it makes people, have a really difficult time conceptualizing doing something else, especially when they've invested all of this time, like being the good student and going to the right firm and doing the right thing. And there's a lot of, sunk cost in it. There's a lot of your identity tied up in it. And you really, I don't think lawyers ever think about like pivoting. I think, people in business, I think they're kind of like constantly thinking about, well, okay, I'll do this, and if it doesn't work, I'll pivot to something else, and I'll get another idea, or get a different job. Whereas lawyers, it's like, I'm going to be a lawyer forever. That's like their mindset, and their big like radical change might be, oh yeah, maybe I'll go in house, and it's it really it prevents people from really thinking about the options that they really do have, given the amazing skill set that they have. And I just have to say, I mean, for anybody who's like anybody who's trapped in the mindset that they can't get out of law because their skills are not transferable, which you hear all the time. I mean, it's insane. Like, people would tell me that my skills are not transferable. What I have found is like getting into this business where there's a lot of people who like bootstrap their way in here, people who, aren't well educated, just have real good business sense. But the advantage that I have is like, because of that professional education and that those years of working in an environment where like a high degree of professionalism was demanded, when I put together, like, say, offering, packages. So I don't do the legal work, but so I don't do the like prospectuses. I don't do the private placement memoranda, but I put together all the marketing materials myself. And like, people look at this stuff and they're really impressed because they're like, I've never seen anybody who's doing like a syndication on your level putting together materials like this, because it's not standard. So you find that like your skills are transferable in ways that you don't expect them to be, and you could never really anticipate them to be until you actually get into another field.
I completely agree. And I find more and more the people I talk to who've gotten out of the law, it's so interesting to see how their skills transfer into such a wide array of jobs, professions, industries. I know people say that being a lawyer opens doors, and I wouldn't suggest someone go to law school just to open doors, but it truly does provide kind of a skill set that translates well in a professional kind of business environment, regardless of the industry or actual job.
Yeah, and I think like your analytical skills as a lawyer, you're being trained to like really dig to the bottom of things. Mm-hmm. I feel very confident when I get through due diligence that I've found everything there is to find, because I was trained to do that. And I also think like being risk averse in a profession like real estate is a really good thing, because there are so many people in this profession who are just cowboys who take a lot of risk, and some of them get away with it, but a lot of them don't, and a lot of them blow up and are never heard from again because they rode that wave just a little too far,
Yep.
and because they have so much trouble seeing the downside, like they don't even comprehend kind of downside risk scenarios. So being a lawyer where you're trained to look at them is actually really helpful in this business.
So I would love to transition a little bit into real estate investing itself, because I know that a lot of lawyers think about real estate investing, especially when you become more senior and you've paid off loans, you start to be sitting on more cash, and you want to know how to kind of get a return on that money. And people are looking to diversify, find alternatives to a more typical portfolio, and real estate always comes up. Who do you think real estate is a good investment for, or what do you think is a good introduction to real estate for people who are considering it?
So this is, I have some bias here, but I think real estate is a good investment for everybody, really. And the reason for that is, particularly the area of commercial real estate, which I'm involved with, there are a lot of really good attributes to this kind of real estate. And a number of them are that one is that the great crash aside, everything went south in the great crash. Other than that, real estate tends to be uncorrelated to other assets. It's not correlated to the stock market. So the cycle is always on a different schedule, essentially. So if the stock market is crashing, it really won't affect real estate at all. So if you're looking for something that's going to diversify your portfolio, commercial real estate is a really good one. Another reason that commercial real estate is really good is because you don't just make money on appreciation, but you make money on cash flow. And the cash flow has the effect of offsetting the losses that happen when the property goes down in value. Now, if you don't have to sell the property, those losses are never realized anyway. But if you're just looking at taking a snapshot, the cash flow that comes off the property, if you buy it, at the right valuation, is going to offset whatever devaluation you're going to get during the down part of the cycle. So there's a really interesting, I can say this to lawyers because lawyers love to look at data and read weighty documents. There was this article that I go back to over and over and over again. It was published in 2012 by JP Morgan Asset Management, and it's called Real Estate Alternative No More. And one of the things that was fascinating about this article was that it followed the commercial real estate investment world from 1977 to 2011. So that included several real estate crashes, and including the Great Recession. And what it found was that they looked at property during the worst, during 5-year chunks, and in the worst 5-year chunks, real estate still actually made money. So if you invested $100 in real estate only in the bad times, you came out with $110. Whereas if you invested $100 in stocks and bonds, like in your 60/40 classic allocated portfolio, only in the worst years you came out with $94. So basically, it's like a 15% or 16% delta between those two investment strategies. So it's a really good asset to have in combination with other things. But there are a lot of caveats, and I know we're going to get into that. But so it's really good. I think it's good for anybody, but we'll talk more about it as we go.
So I would be interested in taking one step back, and I'd be interested in your thoughts on whether buying a home and investing in real estate are the same thing.
Okay, so I have very strong opinions on this. Is kind of a leading question. I know I have very strong opinions about whether a home should be considered an investment or not. And recently, it's been very popular to say. There are people out there like Grant Cardone is one who will say, don't buy a home, or James Altucher will say, don't buy a home. It's a terrible thing to do. You should just rent. And I actually don't. I'm not a proponent of that at all. If you compare renting to buying, let's put it this way: you lose less money by buying a home than you do by renting, right? Because you do get the equity build up, and especially if you're holding it for a long enough period of time. And if you're a lawyer, you're making enough money that you can, if you change jobs, if you move cities, in the worst case scenario, you have to support 2 households for a while. You can do it, right? So it's not maybe the same scenario as for other people, but looked at as an investment, it's a terrible investment. If you just looked at a home as purely from an investment standpoint, you would never make this investment, because what happens is people, when they think about buying a home, you used to live here in Brooklyn with me, and you know this mindset. They bought a brownstone for $500,000. 10 years later, it was worth $1 million. And they're like, wow, look at this. I doubled my money, right? And they pat themselves on the back because they're so smart because they bought at the right time and they doubled their money. What those people never account for is that they had enormous carrying costs along the way. Yep. So they had the biggest one being their interest payments, right? There's taxes, there's maintenance, there's any kind of renovation they did to the house, there's insurance. And if you actually go and look at all of that, you'll find that very often they've actually made no money at all. So if you want to think about as I said, compared to renting, you still come out ahead. But if you want to think about it as an investment, when people say to me, "Oh, Jonathan, I don't want to invest in commercial real estate because I'm already exposed to real estate through my house," it just makes me cringe, right? And actually, for anybody who's interested, if you go to my website, I have an article on my website that you can download called, I forget the exact title, but it's essentially something like "Why Your Home is a Terrible Real Estate Investment." So I take you through the whole analysis with numbers to back it up to show you why your home should not be considered a real estate investment if you're interested. And I'm sure in the show notes you'll be able to find my website. But
yes, I will definitely include your website in the show notes. And I obviously, yes, that was a leading question because you could have guessed that I share your your strong beliefs that your home is not a investment, and it certainly does not expose you to real estate in the
as an asset class, as an
correct,
investment
as an asset
class.
in that sense.
Yeah.
So the next thing that people should probably know a little bit about is the difference between active and passive. And there's not really, I don't really believe in, quote unquote, fully passive investing unless you're talking about like dividends. But what do you think of as a difference between active and passively investing in real estate specifically?
Yeah. So, I mean, it's a good distinction to make because I think that there is a perception, and it's a wrong perception, that real estate is a passive investment, that you get passive income from real estate. And, we're not talking about like tax treatment here. I'm talking about the work involved. The only way that real estate is truly passive is if you hire somebody like me to do it for you. And you are literally getting a dividend, and you actually don't even own real estate. What you own is a security. You own a membership interest in a company that owns real estate. In that case, you send a check at closing, and you get checks every quarter until the deal sells. However many years later it is, and that's all you do. That's a truly passive investment in real estate. If you actually go and buy the real estate yourself, it's not a lot of work. But it's not passive. You're going to have to, either you're going to be responsible yourself for, leasing it when it's vacant, calling the maintenance guys to take care of stuff when stuff breaks, paying the taxes, doing all of those things that you need to do, sort of arranging for the upkeep of the property, dealing with renters, renter problems, chasing renters when they don't pay their rent. You're going to have to do all those things. And even if you hire a property manager, you still have to manage the manager. And, that's not easy, as both you and I can attest. Managing the manager, while not time consuming necessarily, is another, headache of its own. And I actually want to relate a story. This is not my own story, but I have a friend in New Jersey who's a very successful house flipper. And one of the first deals that she and her husband bought that they did really, really well on was this house in Jersey City. It was like a fourplex in Jersey City that they bought from some investment banker who bought it as an investment. And over the 4 years that the guy owned the property, it was like the first year it did great. The second year it did okay. The third year it lost a little bit of money. The fourth year it lost a lot of money. And he decided to sell it. And the property manager was telling him, "This is a terrible property. Nobody wants to live here. You can't rent it. That's why you're not making any money on it." My friends were able to buy it super cheap, right? When they bought it, they found out that it was rented the whole time, but the property manager was just taking the rent checks and putting them in her pocket, right?
That's my biggest fear as a property owner.
And just telling the guy like, yeah, nobody wants to live here, right? So that's the kind of thing that can happen even if you have a property manager on site. So this is not a passive investment, and you shouldn't think of it. It's a business, and you have to treat it as a business unless you hire somebody like me who's an asset manager whose job it is to be on top of the property manager.
So I think that's a great segue. You offer passive investment opportunities, and I guess it'd be good for people to know a little bit about kind of what that means and how they should judge good opportunities and what kind of returns people get from this type of investment and, kind of the things to be wary of in addition to all the perks.
Yeah. So, if you're looking at what's called the syndication deal, which is where it's basically a private securities offering, and so the syndicator, who's me, or also called the deal sponsor, will go find a deal. Generally speaking, use their own money to put down the deposit to get the deal under contract, and then they go to their investor group and they try to raise the money for the equity so that they can close the deal, and they get bank debt, generally speaking. And so if you're thinking about that kind of deal, obviously, you want to work with somebody who has a track record, who's done it for a while, who's been successful at it. You're going to want to talk to this person, make sure you feel comfortable with them. It's like interviewing anybody else that you might interview for like a very important job. There's got to be. It's not as cut and dried as just like your stockbroker says, buy this stock and you invest in a public company, and there's a lot of transparency to it. Like there's not a lot of transparency in this business. So you have to make sure that the syndicator that you work with is somebody who is, going to give you regular communication and give you regular, reports. And you should probably ask to see what their kind of quarterly reporting looks like. So, definitely you want to meet this person in person if you can. If they're not located locally, you absolutely want to get on the phone with them a number of times, kind of like suss out their track record and the philosophy. And you also want to make sure that there's a match there, right? You want to have it be somebody that you like and you get along with and you see eye to eye with the kind of overall vision and thesis that this person has for investing. The other thing you have to realize is that the way that the deal documents are drafted is going to give you really no power at all. And that's done for a reason. Like you can't, as a syndicator, from like my perspective, I can't have, 20 different people like with the power to tell me what to do on the property, because they'll all tell me something different. And that's just a recipe for disaster. So the deal docs are going to give you very, very little power. It's really a passive investment. It's not liquid. This has got to be money that you're ready to sit on for a long time. Could be 5 or 10 years. So this is not, this is money that you don't expect to be able to just like sell out your interest very quickly. This is like long-term patient money that you are happy to have work for you for a long time, and you're going to invest it and then just like not think about it that much over the course of the deal. But you obviously, because of that, you need to trust the person that you're working with. You need to see eye to eye with them. You need to sort of be on the same page with them. It's a lot more of like a boutique kind of concierge-y type business. It's more akin to like how you would hire your lawyer or your accountant or your doctor than, like even a stockbroker, or a wealth manager. Like you have to have that kind of level of rapport with them.
And what kind of range of return should people expect from this type of investment?
I mean, so right now, unfortunately, we're really at the top of the market, and the returns have been really, really compressed. So on a standard deal that I would put together, I would be looking for a deal that was going to be returning, 7 to 8% cash on cash immediately as soon as we bought the deal. And over the life of the deal, we'd be looking for, on a standard deal, sort of run-of-the-mill deal, anywhere between 15 and 20% on an annualized basis, over the life of the deal, including the sale. If you really hit a home run, it could be 25, 30%, but that's pretty unlikely. What I see now happening is that, investors, especially like the retail investors, and I think the lawyers would fall into this category, they really don't start opening their wallets until you kind of promise them that 7 or 8% return. Yep. It's very, very difficult to generate a 7 or 8% return right now. And the way that you do it is either by like making really, really aggressive assumptions yep. in your underwriting, or you load up on a lot of debt, or both. And I think that's what's happening in a lot of cases. So like for me, I can't generate those returns right now. So I'm basically out of the market. Like I haven't seen a deal for a couple of years that made sense for me. The last deal that I bid on, I was aggressive to the point where I was really uncomfortable submitting the bid, and I was told that I was off by 20%. So, by the broker, they said this is 20% short of what the seller wants for this property. So I've been focusing on kind of like meeting more investors, building up my base, because I know that the downturn is coming, and when it comes, the buying opportunities will be great again. So I want to get ready for that. So I'm not looking to buy deals right now. It's just I don't really want to beat my head against the wall trying to find the needle in a haystack at the moment.
I agree with you, and I have been doing the same thing. I've been looking at deals, doing the work just to kind of keep myself fresh and be in the market, but with no intent to buy anything really until I see things come down a little. But I'm looking at the time and don't want to take up too much more of your time. So I'd love if you could just tell us briefly, now that you're not doing deals, what do you see coming down the pipeline for Two Bridges?
Well, so I've actually been focusing a lot recently on developing an online educational platform for people who want to learn how to do apartment deals themselves. So people who are interested in buying not single family homes, but if you're really interested for whatever reason in the apartment space and you're looking to buy deals that are, 10, 20, 50, even 100, if you've got the money or you've got a group of guys who want to get together and do it, I've put together a course that walks people through really like soup to nuts on how to do these deals, building out further programs. So that's what I've really been focused on. I've also built an online community that's free that people can join where they can ask me questions about investment. That's on Facebook. It's called the Multifamily Investment Community. If you just search for it on Facebook, it'll pop right up. And if you ask to join, I'll let you in. But yeah, that's what I've been focused on really primarily for the last few months as I'm kind of riding out the rest of the cycle, which hopefully won't last too much longer.
Fantastic. Yeah, no, it's a really great group. I recently joined and I'm looking forward to being a lot more active in there and really getting my skills and my knowledge leveled up so that I can do bigger deals when the time comes. But I want to thank you so much for being here with us today, for being a part of this project and sharing your story. It's so great to connect with you again and for other people to kind of hear your story, because I found it really inspirational the first time I heard it a couple years ago. And so it's great to hear it again. And before I let you go, I just want to ask you the last question, which I ask everybody who comes on the show. And that's, what do you think separates lawyers who are happy from lawyers who struggle to find happiness in life with a law degree?
Wow, that's a tough question. Because I've known a few really, really happy lawyers and a lot of miserable ones. And, the ones who are happy, for whatever reason, they're the ones who, the job really meshes well with their personality. The kind of work that they're doing meshes well with their personality. So they're able to use, their day-to-day life as a lawyer enables them to use skills that they really enjoy using. Like a good example is one of my law school classmates, one of my best friends from law school, who is a very successful litigator. And I think the reason for it is because he's really competitive and he really likes to win, right? So being a litigator like really enables him to like tap into that, super competitive part of his personality. And he's able to do that every day. And I think you have to, if you want to stay in law and you want to be happy and you're not happy, you got to kind of get yourself into that space that enables you to spend your days doing things that you like to do. That's what I see as the, sort of the separator. If you're stuck doing stuff that you don't like doing, it's a recipe for being really unhappy.
Yeah, I know it sounds simple enough, but somehow people don't seem to pick up on that. And I think you're right on. I think that alignment between kind of who you are and what you do really increases your sense of happiness.
Absolutely.
So thank you so much for coming on today.
Yeah, it's been great. It was great catching up with you, and I really enjoyed this today.
Thank you for joining me for the Happy Lawyer Project podcast. Please head over to my website, www.thehappylawyerproject.com, for more information from today's show. While you're there, I'd love it if you'd leave me your thoughts on the show. You can also connect with me on LinkedIn, Facebook, or follow me on Instagram. If you've enjoyed the show, please share it with your friends. And don't forget to head over to iTunes to subscribe and review the show. As you know, each rating helps more listeners find the show and helps me get awesome guests on here for you guys. If there's anyone you'd like me to have on the show, or if you'd like to be on the show, head over to my website and let me know, or send me an email at Okema, OKEOMA, at thehappylawyerproject.com. A special thanks to everyone who's left a review, sent me an email, or reached out to me in any way. I appreciate you. Thank you again for spending this time with me, and if you would like to learn more about working in your gift and living your passion, head over to the website for a free gift. Until next time, bye!